Welcome to this week's video, guys. In this video, we're going to be going through the best way to get the best entry. Okay, you see so many traders across the industry getting crystal clear entries. And this week, through backtesting using my trading journey, I've been able to solidify this theory. I've been trading this for a while now, but I've been able to kind of find some examples throughout this week to show you guys to make your job easier. On the Go For The Trader Instagram page, there will be a short-term video of this. This is going to be the long-form video, so this is going to be me thoroughly explaining it, okay? So I hope you guys enjoy the new office. We are in a new space. We're in a new workspace, new lighting, new camera, everything's new. And yeah, it's exciting. I think it's quite cozy. You know, it's quite simple in this. There's a lot of screens in front of me, but this is what we need for the job. So hope you guys don't mind the new change. Anyway, we digress. Let's get on to the charts. So most of the time we are looking for liquidity. And in the previous video, we spoke about liquidity zones, how to form a bias and things like that. And the main thing we want to look at is the trend. So are we on a downtrend or are we on an uptrend? That is the first question that you should ask yourself when you jump on the market. So what are we going to do here? What are we going to ask yourself now in the video? What are we going to do if we're in this downtrend? What trades are we going to be looking for? And 90% of traders are going to go, we're going to be looking for buys. We're going to be looking for a reversal out of the demand zone, right? Sorry to tell you, but that's very, very wrong. What we want to see is an impulse like so, and we want to sell this impulse for the continuation. Because probability-wise, because again, we're trading off probability, guys. Probability-wise, this is going to be the most probable trade that's going to go our way. I would speculate, again, this is just hypothetical, I would think you've got a 70 to 30 chance of it continuing on down instead of reversing. We're going to go through some examples to kind of solidify this idea. Okay, and then of course on an uptrend, what are we going to do? Most people are going to be looking for shorts. Oh, it's going to go grab this liquidity, it's going to grab this low, and it's going to continue on down. No, we're not trading that anymore. That's not how the markets run. We're going to be looking for continuations. We're going to be looking for dip buys like so. Okay, I've been trading gold all week. Trust me, I'm a trader. I know what I'm talking about. I've done this issue all week. Every single day of this week, I've been trying to reverse the market. It don't work, okay? So let me talk to you how we're going to do it. First thing we're going to look for is liquidity. So we want to see a zone liquidated. So we want to see potential like an uptrend like so, on an overall downtrend, let's say, for example, and then we want to form like a neutral high like this, for example, hypothetical. We want to see a large sweep towards the upside and a large move down. And then we're going to be coming from a downtrend anyway. Okay, let's say, for example, this high is the one that got swung. Okay, we'll say this is a pivot point and this high got swung, and then it's going to continue this downtrend on. Okay, this on a smaller time frame, of course. From here, what do we then want to do? We want to do this on a smaller scale. So we want to take this entire thing and we want to put this onto a smaller scale. So let's say, for example, now we're overall on a downtrend. Now we're on an intraday time frame downtrend. We want to see something like this, trend, liquidity sweep, and then we want to see it move down, and we are going to be shorting that liquidity sweep with a point of interest. So let me talk about this now. So this is going to be the box that we're going to be looking. Okay, just like this. Now we need to pick out a point of interest. Maybe we can say these lows, maybe we can say an imbalance, maybe we can say a fair value gap, whatever it is. We want to see neutral highs or liquidity being created, and we want to see the market swing this liquidity into a previous pivot point. Okay, and as you can see, this is a very nice example. Overall, the first thing that we're going to be looking for is a downtrend. We're going down, which is number one. Okay, small uptrend. We want to see low volume. Okay, we want to see the uptrend with low volume. That is a volume divergence, so we call that VD. Downtrend, uptrend, we swung this high by here. We marked down, broke this structure here. Now this structure is strong. So we come back in, test this structure, and we reject. Look, oh, now this high is strong as well. Okay, so the high is strong, meaning we are on a downtrend. And then you can see the market just then goes and swings the liquidity further. So that's kind of the template we're going to be looking for. I'm just going to leave this on the screen for you guys for a second, just to screenshot it. So this is kind of like best of luck way of putting it, I guess, you know. It's not the easy way, but And what do we have on your USD? Prime time examples. I'm just going to get rid of my indicators here to show you guys. So this on the hour time frame, and of course, best of luck. On an overall downtrend, okay, well, on an overall downtrend, the market is trending down. And your first thought on a downtrend, guys, what is your first thought on a downtrend is going to be, we're going to downtrend and we're going to completely reverse, grab this high, grab this high, grab this high, etc. Don't think like that. Again, reversal trading is beneficial. It can be done, and there are times where we will reverse trade. And maybe if you guys leave a comment below, let me know if you want to see a video on how to properly reversal trade. Let me know. But for now, we don't want to be reversal trading. We want to play in the continuation, especially with the economy at the moment, especially with news coming out, GDP. Things aren't looking the best, I might add. So we want to just be playing with everyone else's bias. We don't want to be thinking we're the smart dogs in the industry. Okay, just go with the trend. But this video is going to be how to go with the trend and also find your entry. So this is where you're going to be finding your entry. Okay, so bias wise on this chart, let's go into it. We have a swing of liquidity. Number one, we're overall on a downtrend. Number two, we have a huge swing of liquidity, and you can see the market marked down. Three, we're in a downtrend now. So if we jump onto so that's the hourly time frame, right? We jump onto like a 15-minute time frame. This is where we're going to be wanting to take our entries. Okay, so what do we have here? We have a huge downtrend, and as you can see, we kind of have, we'll just draw it out, right? Because it's like we don't want to be like drawing lines and stuff, but we have like this high here, this high here. It went and swung this liquidity. What do we have? A point of interest by here. So first thing is look for a point of interest here. We want to see the market come in there, and we want to see the market grab liquidity before we go grab that point of interest. Okay, let's have a look again. Let's say, for example, here we have this nice low down here. This is going to be a nice pivot point for us. We're going to mark out this pivot point, and we want the market to come back into this zone. So market's broke below. Okay, we've missed entries. We're still on a downtrend, and as you can see here at this pivot point, this is going to be where you want to be looking for. So we have this nice area of consolidation, and what does it do at this nice area of consolidation? Problem is, guys, just for a little bit on top of that, most people are going to be shorting here with their stop loss just above here. This is why it's important to wait for the liquidity sweep. So most people are probably shorting here, the 5 pip stop loss maybe. I know it's really tight, you know how traders are these days. 10 pip stop loss, you would have been safe anyway. Most traders will probably put their stop loss maybe just at the high, things like that. So now we've generated this area of consolidation, liquidity. The market's then run and swung these highs. Most people are probably getting into buys at this point, thinking the market's continuing on up on a smaller time frame. But no, we're very smart, and we're going with the trend. And as you can see, it come into that pivot point, grab this liquidity, and then carried on down in the session that we was looking for. And the same thing again. We had a huge push up swing in this previous high, and then the market plummeted down. We have a period of consolidation here. Like, guys, like I'm not I'm not making this up. This is like every chart. So maybe we go for a other time frame order block by here, and as you can see, we have this period of consolidation. Massively swung it a bit more than I would have anticipated, but we swung it, we tapped into our point of interest. And then what we're going to do, guys, we're going to short either the equilibrium of the point of interest that we've won, or we're just going to short wherever we want. We're going to short within this zone. Okay, so we point out our area of consolidation where we want the market to swing its liquidity. When it swings its liquidity, we mark our point of interest, and at the point of interest, we trade inside that. One good way of doing it is potentially putting it up like a Fibonacci in the zone, just getting your equilibrium, so the 0.5% zone. So we've marked out the equilibrium in here, and then you feel free to grab that equilibrium of that point of interest that you're looking for, and so on and so forth. Maybe now a trade is setting up where we have this point of interest up here, nice order block on the 15-minute time frame. We've then gone and swung this previous high here, so that's nice liquidity sweep. But I mean, even here though, guys, we're starting to create this consolidation phase. So we're in this phase here. If we start consolidating and have a huge run up, I will likely take a short at this point of interest, either here, the equilibrium, or the high. Usually the best entry, guys, to be fair, is the high. Okay, you're going to get better risk to rewards, you're going to get better rates, but sometimes it doesn't always go to the highest point of that level. Best of luck. The thing is that you account for slippage, you account for essentially the market actually going to swing this high and then coming down, etc. But what we want to do is go for like, I don't know, a 10, 15 pip SL. You can put 10 lots on and risk 10 1% or 1.5%. So let's say, for example, we risk 1.5% on this trade. We have 15 pips, which leads us back up to this previous high. Is the market going to continue onto that? It might, but I'm picking up this smaller time frame. And then even then we can go, okay, here we go again. If we get another setup like consolidation phase and a liquidity sweep, etc., etc. All right, let's quickly go on to gold before we finish up here, guys, because I like to make short and snappy videos. So gold here had a nice pump up here. I was actually going to take a trade yesterday, but I didn't like it. So what are we going to be looking for? Let's look for an example. So this is a perfect example of people trying to short the market when they don't need to. Overall, on the hourly time frame, like this is a big downtrend, but this is an uptrend from that downtrend from this impulse. So we're going to be playing a continuation because the market hasn't gone and swung this strong low. Okay, so we are on an uptrend, but overall, yes, we are on a downtrend. But on this period here, we are on an uptrend, so we do not trade against it. Let's look on the hourly and see if we can spot any interesting things. Best of luck. Of course, we've gone through bearish, but we're going to go through bullish. We want to kind of see the market generate liquidity like this, swing the low, pick up liquidity, and then best of luck. Is that right? And you've probably seen this theory everywhere, to be honest, but I'm the best to teach it because I've actually traded it. That's the difference, you know. So we can go through this example now on the 15-minute time frame because I'm not seeing any hour. This is a bit of a difficult example, but it kind of works. So we have this period of consolidation here. The market then didn't liquidate it. It actually ran down quite strongly below it. But we take this into account. You know, we might be targeting this low, or, you know, your area of liquidity, the trend line liquidity, or whatever it is. You just targeting for it to swing liquidity. You're targeting it for, you know, people to swap hands, people to get stopped out, etc., etc. And as you see, the market swung lower, picked up our point of interest, and then ran from there. Let's see if we can take any other examples from here. Even this here, we had this like nice uptrend, bit of consolidation, swung this low, picked up this demand. That is actually a perfect example I was ideally looking for. So we have a nice demand zone by here. Markets ran up, chop, 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 chop. It's then swung all this liquidity that was generated here, potentially short. And then we've gone for an order block and then bang, it's absolutely ran from there. So that's ideally what you want to be looking for. Best of luck, you know. Those are the type of trades. Yeah, even here, guys, like I know now it's switched to a downtrend and things like that, but we have like this consolidation phase here. Best of luck. The market's then gone and ran it and then come straight back down. So you could have took, let's see if we can pick out a point of interest. Even this order block here, if we grab this order block here, and that's going to be our point of interest. As you can see, the consolidation phase was before the point of interest. We then swung this liquidity here, grab a point of interest, and come down. So your entry would be at the start of here, the middle, or the top. Again, this is going to be for your back test and what works for you, what works for your risk to rewards. If you have a looser tight loss, if you have a tighter stop loss, then yeah, probably go for the middle or the top. If you have a looser stop loss, then more than happy to go for the start of the point of interest that you're looking for. Just make sure your point of interest is defined as well as possible. You know, for example, on this one, we're looking for this breaker. Potentially, we're going to be looking for that previous support zone. And we also have an imbalance by here. So we could be just adding those two together, and then you've got two areas of confluence to trade from there. So this is not a complicated way to trade. It's quite hard to see because I've got so much experience in the market, so I can see it constantly. I can see it brewing up. I mean, like we even said on your USD, it's doing it now, you know. So we are breaking out that consolidation. People are probably thinking, oh, you know, let's get into longs, but I'm on the other fence going, it could be looking for a short position because overall, look, we are on a downtrend. Don't look back here. It doesn't matter. It doesn't matter. It matters about these highs. It doesn't matter about swinging these lows or anything like that, because, you know, you're going to pick out, oh, this low is important, but then this low is important, then this low is important, and this low is important, etc. And then this low is important, and this low, you know, you start to kind of fight yourself and try to find that one zone that matters, but you're looking at the wrong zones because they don't matter. But anyway, best of luck. Talk about this for hours, and you guys know me. I could talk about trading for hours. I can see this so easily because I trade it, you know, because I've been trading it. I've been analyzing it for a long period of time. So, but if you guys want to backtest this, the best software I use is My Trading Journey. It's a backtesting software that I use every single morning of the trading day. I make sure I'm on the ball with everything, and it's just something that is kind of I do religiously, and it gets me, you know, prepared for the market, I guess. So yeah, make sure you guys are backtesting and seeing this throughout the markets and take notes of what you're seeing, and then you'll slowly start to see it in your brain a lot more. And best of luck. Yeah, that's the video. Let me know in the comment section if this helps you guys. I really want to know if this is helping you guys. If you want me to make more content like this, please let me know, and I will definitely make more. We currently have a massive advent calendar out for GFT. We have discounts and promotions coming out every single day. of December, I think until the 24th of December. So make sure you join the Discord for any internal updates. Make sure you have a look at the website for any promotions on there. And yeah, take advantage of these discounts, guys, because they're coming out every single day. They only last for 24 hours, and then there's a new one. Best of luck. Video, guys. I hope you all have an amazing week next week. Hope you all have an amazing weekend if you're watching this. Oh no, this will be on a Sunday, so hope you have an amazing week. I hope you guys have an amazing week. I hope you guys are successful. Remember, the trend is your friend. Trade with the trend, okay? Best of luck for next week, guys, and I will see you all in the next video.